Today we're going to talk about tax fraud exposure. How do civil IRS audits turn into criminal tax cases? Tax fraud cases that come out of audits don't usually start with arrests, okay? They ordinarily start off quietly, often without the taxpayer or their representative being aware. A civil audit, a collection issue, third-party data mismatches to filed returns, or records that simply don't add up. And while the case looks routine to you and your representative, the government may already be building a tax fraud narrative. Hi, I'm David W. Klossing. I'm a dual licensed tax attorney and CPA, and I'm the owner of the tax law offices of David W. Klossing. Right now, 24 offices in 11 states. Today, I'm going to explain how tax fraud exposure develops, what triggers criminal escalation, and how you should go about responding safely before a civil case turns criminal. Well, let's start with tax fraud, what it actually is. I'll start by telling you that not every mistake that you can make or your payer can make is fraud. The IRS distinguishes fraud from negligence, carelessness, or reasonable mistakes, whatever that is. But once the government believes you acted with criminal tax intent, everything changes. The case can and will morph from civil compliance over to criminal tax enforcement. A lot of tax fraud cases begin inside civil processes. That includes audits, collections investigations, unreported income, false deductions, or inconsistent records. The IRS builds criminal cases based on patterns of behavior that they've noticed over the years that they call badges of fraud. It doesn't do so on isolated errors. Badges of fraud include false or altered documents, keeping a double set of books, concealing income or assets, backdating records, destroying documents, giving inconsistent explanations, or telling outright lies. One occurrence may not prove fraud, but tax fraud pattern or badges of fraud across multiple tax years definitely do. So you have federal and state risks for tax fraud. Tax fraud exposure exists at both the federal and state levels if there's an income tax within that state. At the federal level, civil fraud penalties are best case scenario, 75% of any underpayment attributed to fraud. But if they have the evidence to go after that penalty, they have the evidence to come at you criminally. Tax evasion is a felony. Also at the state level, California, for example, and most other states, they prosecute tax fraud aggressively. They go after false returns and failure to file with intent to evade tax. So when do civil cases turn criminal? Civil cases escalate when the government sees things like willfulness, concealment, or deliberate misconduct. Misconduct includes false documentation, manipulated records, or intentional omissions. At that point, civil enforcement tools may not be seen as enough. So, what are the most dangerous mistakes we see taxpayers making in these type of situations? The biggest mistake taxpayers make is trying to fix the problem the wrong way. That includes rewriting records after the fact, inventing documentation, or adjusting numbers after the fact. These type of actions often create the very evidence the government needs to criminally prosecute. So this is why early defense really matters here, because timing matters. Early strategy in an audit, if there's underlying tax fraud, can and will prevent escalation criminal. Late strategy only manages damage control, because once the government defines the narrative surrounding your audit as criminal, it becomes exponentially harder to change the outcome of that audit. So, in closing, if you believe your situation may involve fraud risk, you should act early. At the tax law offices of David W. Klossing, our dual licensed attorneys and CPAs handle both civil and criminal tax matters routinely. Call 1-800-681-1295 or visit klossing-associates.com to schedule a confidential reduced-rate initial consultation today. To date, no client we have ever represented in an audit has been criminally prosecuted for tax fraud. Thank you. Call us today. You won't regret it. Dave Klossing, Tax Attorney, CPA.